You are trying to curate a particular option from the product for that particular customer and show him that this is the product which will fulfill your need, what you're searching for. Insurance basically is a risk averse kind of a product. It gives you a total flavor from a very conservative investment perspective to a very aggressive, which is a ULIP. This is how the transition happens. You are first thinking of a protection plan, then you move to savings, then you're thinking for a child education and all, then you're thinking about your own retirement. So various needs as your life cycle proceeds, you basically keep on trying to address one need after other. And the entire dynamics has changed from 3,000, 5,000 kind of average ticket size to 50,000 plus kind of average ticket size now in 20 years. So it's a 10-time kind of a shift which has happened already. We have been talking to even government about it, that as you make it mandatory to have a vehicle insurance, you should make it mandatory to have a life insurance along with, so that the liability is at least covered. So whatever asset the person is buying, whenever he's taking a loan, that loan is taken care by the insurance company and that asset remains for the family.
Hello and welcome to the HT Brand Leadership Series, a series of one-on-one interactions with top brand and marketing leaders who share their industry insights and strategies that have helped shape their stories. This series, hosted by Hindustan Times, offers a behind-the-scenes look at how leaders adjust their strategies for changing consumer behavior while leveraging media channels that improve customer relationships. Today, we are joined by Maneesh Mishra, the Chief Product and Marketing Officer at Bandhan Life. With over 23 years of expertise in life insurance spanning product development, bank assurance partnerships, and corporate strategy, he brings a holistic view to marketing, product innovation, and consumer experience. He has previously led product strategy and sales at India First Life and held key roles at HDFC Life, and now overseeing Bandhan Life's ambitious growth plans, shaping both its product roadmap and brand narrative. Thank you, Maneesh, for joining us.
Thank you.
Thanks for giving us your time. Maneesh, I want to talk about this specific arsenal that you have, which is also understanding product. You oversee both product and marketing. How do you ensure harmony between what Bandhan Life offers and how it's communicated to consumers?
So when I look at product, I'm basically looking at what customers are asking for. Once you know what customers desire, you are able to construct a product around it. When it comes to marketing, it is about communicating what your product is bringing to the customer. How is it fulfilling the need? Okay. So that is the whole focus when I look at marketing. It is more about what is the need that product is fulfilling and which feature of the product is fulfilling that need. So we talk about that particular feature as a USP to the customer. Whereas when I'm making a product, I'm thinking holistically about the product, which customer segment it is addressing. And basis that, I make the product.
Understood. But you've been in life insurance for over 20 years. There have been many insights that must have reshaped your marketing strategy in the recent years. So how are you seeing the consumer behavior changing and how are you aligning your product features according to that?
The major change that I have seen in last 23, 25 years rather is adoption of digital channel as a medium of information, and it is also changing behavior of the customer, because now a lot of customers are utilizing digital mediums, whether it is social media or whether it is company's website and all, to get a lot of information, and that information is utilized to understand what do they want, and hence there is a marketing also has to move into that direction. We are also thinking about which digital medium to utilize to reach to which customer, and then curate the products accordingly so that whatever his behavior is telling me in terms of need, what is he searching on the website, what is he searching on the social media, and basis that curate a product for that particular person. And that's what personalization, hyper personalization is happening on the product side as well as the marketing side. You are trying to curate a particular option from the product for that particular customer and show him that this is the product which will fulfill your need, what you're searching for, and this is how you can go ahead and buy it.
Understood. Because as you may have already seen in the past few years, insurance has always been an offline sale model. Looking at the previous regime with LIC used to follow. And hyper personalization did exist because the sales executive would try and understand your financial goals, would look at your profession, look at your background, look at your appetite for premiums, and then probably suggest a plan. And here as well, we are just doing it on a digital platform. But having said that, there are so many products now available to a consumer. How is it possible for a consumer to decide while interacting digitally with you that this is the product that should ideally solve my financial goals?
The main challenge that any customer faces is, first of all, to identify the need. Okay, what exactly he is looking for. Once you are able to ascertain that, then you start looking out at what are the possible solutions to achieve that goal. On the financial side, there are multiple mediums, and not only insurance. There are mutual funds, there are other instruments which are available, give you similar kind of an output. Okay. Now you have to think from your risk appetite perspective, what exactly is your risk appetite? What will happen if you are not able to achieve that goal? And hence, insurance comes into picture. Insurance basically is a risk covers kind of a product. It gives you a total flavor from a very conservative investment perspective to a very aggressive, which is a ULIP. Okay. So whenever a customer is coming and identifying his need, we are providing him on the website various calculators and all, visual mediums to understand how the journey of his financial saving is going to be. He can play around with that, and once he plays around, he understands what kind of premium he's looking at, what kind of product he's looking at,
Correct.
What are the main features of the product which is going to address his particular need. So just to give you an example, if somebody is looking for a child education, financial capacity to achieve a particular child education goal, they have a figure in mind. That figure could be 20 lakh, 30 lakh, 50 lakh, depending upon where you are looking your child to go for. Okay. In a mutual fund or any other instrument you will save, you will continuously have to save for X years to achieve that goal. Okay. How insurance comes into picture is that it gives you a downside protection. So because you take a sum assured as a cover, that if something happens to me, this is the amount that I have to reach. Okay. If anything happens in between, the saving has to continue throughout. So though I am not funding it, company should be able to fund it. My insurance product should be able to fund that.
Correct.
To achieve that particular goal. So it gives you a guarantee in that sense that whether you are there or not there, that goal that you have aimed for, that amount should come, and you play around with those calculators to arrive at, okay, this is the amount of saving I have to do. These many years I will do the saving, and this is the kind of return that is generated, which will help me reach that goal. And that's how you do the planning.
So today, if a first salaried professional who's beginning to start looking at his or her financial goals, when do you think they should invest into a life insurance policy? Is that the first thing they should do from the first check, or they should also start an SIP, or both should happen together?
Today, the way expenses are going on, okay, I take my own example. When I started working, the first product I look for is a term plan. Okay, the reason being, in case I am not there, my parents are there, other members of my family are there, they should have at least some financial stability there. So that is the first product I thought of. At that time, I didn't have that much disposable income that I could think of SIP and all. Okay, because majorly when you are a bachelor, you are thinking about spending and all.
Expenses.
And expenses are the major consideration. And saving comes at the last.
Yes.
It is when you transition from a bachelor to a married person, that's when your liability also increase and you start thinking about saving.
Correct.
And that's where I started thinking about, okay, what kind of a product should I buy? That's where saving insurance product, mutual funds come into picture, that okay, I will have X percentage of my portfolio into insurance ULIP kind of product or saving kind of product. X percent will go into SIP on a regular basis. And when I reach around 40, 45, then I start thinking about my retirement. So I start saving for my retirement corpus.
Right.
Okay. So this is how the transition happens. You are first thinking of a protection plan, then you move to savings, then you're thinking for a child education and all, then you're thinking about your own retirement. So various needs, as your life cycle proceeds, you basically keep on trying to address one need after other.
Having said that, how do you position a new life insurance product? Do you lead with emotion or functionality or both? Because investing in mutual funds and SIPs is more like a functional need, whereas insurance is more of insurance. So how do you lean? How do you balance this?
So it depends upon the medium which I am utilizing for addressing, or in the customer audience I am trying to address. If I am looking at a mainstream media like a TV and all, it will be more on the emotional side.
Right.
Okay. But when I go towards by leaflets, brochures, there will be more on a functional side. So there I'll be talking more about how this particular thing is helping you achieve your goal. So there it becomes a personalized content and more functional into picture. But when I am talking on a broader audience, whether it's a print ad or whether it is media, television and all, I am talking more on the emotional side.
Your understanding or your studying consumers cannot end, because at the end of the day, you are trying to push for a behavioral change.
Correct.
When you're interpreting different kinds of consumer insights, how does that help you drive product innovation and push that into your marketing campaign? So how you seeing that evolution of the consumer changing?
Just to give an example, so when I started working around 2000, insurance was hardly known as a financial product at all, okay, or even for the protection per se.
Yeah.
It is later in the 2009, 2010 when I think Aegon, erstwhile Aegon or Bandhan Life started talking about "Kam bima lene ki bimari." Okay, so that's where you started realizing, okay, there's a term plan which I need to take, and 10 lakh, 20 lakh is not a sum to take for. A 1 crore kind of an ambition you should have to have meaningful protection for the family. So that transition started happening, and then COVID happened, and suddenly people started realizing protection is a very, very key product in your portfolio.
Yes.
And that's where suddenly people were talking about health, people were talking about life, which was not into consideration of anybody before that. Okay, so entire behavior of people changed, and now people accept the truth that okay, term or a health is a very key component in your portfolio, and then saving or investment comes into picture. So that whole dynamics has changed because of the external environment and media influence that has happened, and that has led to behavioral change. Now people are even talking about, on a health side, super topper, 1 crore kind of a cover on a health product, which was never heard of. So things are changing, people are becoming educated, people are understanding, a lot of information is getting passed to them through mediums like digital medium or TV and all, and that is helping them. So there are a lot of education material which is available online now. People are going, searching, understanding, learning and changing behavior. And in the marketing or product, we need to start understanding about this behavior. We need to start exploring. So we do a lot of research and all to understand how the customer behavior is changing.
Yes.
What are they doing? What are they searching for? And because of that, we are able to predict that, okay, this is the kind of product they will be moving to in the next 5 years or 10 years. So hence we start making those kind of products. So from products which are selling 5 lakh, 10 lakh kind of a sum assured or saving in 2000, suddenly now we are talking about crore and crore plus kind of. And the entire dynamics has changed from 3,000, 5,000 kind of average ticket size to 50,000 plus kind of average ticket size now in 20 years. So it's a 10-time kind of a shift which has happened already. So that's how.
So clearly there is a trajectory.
There's a trajectory that is already happening.
Understood. So COVID did play its role in some way or the other.
Huge role.
So, but still, if you compare it with investing compared to equity investing, it is still a low engagement category. Yes, there has been some awareness that you've spoken about, but it's not still matching the levels that one would want it to be. So how do you make it? How do you make your communication still relevant, and how do you personalize it further when you're trying to explain a product at the end of the day?
So it depends upon kind of customer I am trying to address. So if I am trying to address a very low ticket side of customers, people who are barely looking at insurance as a need, I come with a product kind of Akhil Bharat kind of product, which is rupees 6 per day kind of an investment. So there I am talking about through my distribution channels and all, okay, because that reach is required for the masses. When I talk to a high-end customer, I am talking more from the digital medium perspective. There I will be talking about a low charge ULIP kind of product, okay, because these guys are looking for investment, these guys are looking for returns. So if you see lot of high net worth individuals have huge insurance exposure,
Right.
Okay, which is not there for the middle class or the masses. So people who are educated understand the importance and go for the products which people are not otherwise going for. Middle class takes a lot of time to understand.
Okay.
Okay, and that segment, that's why our penetration is relatively low
Right.
in this segment.
Understood.
And insurance basically is a commitment kind of product, which your other financial products are not. In a FD, you basically invest one time and you sit around. In a SIP, your normal SIPs are
So
around
discipline.
12 months or 36 months, not beyond that. Most of the people stop around that and take the money out. Even MFI reports themselves point out 3 to 5 years the average life of a portfolio in a mutual fund. Whereas insurance is 10 year plus or a 15 year plus
a
kind of
longer
a commitment. The moment that kind of a commitment comes, you have to be knowledgeable enough to do it. Otherwise, you won't do it. And people who do it reap the benefit of it. So that kind of mindset will take time to develop, but it is getting developed in some sense. As you mentioned, the trajectory is moving. It is taking time, but since it is going in positive direction and certain segment of the society has already captured it, it will percolate down as well.
Right, but if you notice, if you look at traditional policy, if I can say LIC again, the default investing tenure was 20 years. But again, I think what it's safe to conclude that the premium amount used to be low, so people could venture into something like that. But again, the returns would also not be high, and
Naturally.
that's obviously the whole corpus
Absolutely.
size also was not high. So I guess it's similar to your EMI, where your home loan EMI. That
Correct.
as you go along, the affordability of the EMI also gets easier and easier, and you try and close the loan much sooner.
So again, I'll take my own example. So when I started working, I was getting a salary of 7,200. Okay, I never envisaged the kind of salaries that I drew over the years. Okay, and basis that, my first investment was that, okay, if my salary is this is the kind of cover I can afford. Okay, over the years, as the salary expanded, I started taking higher exposure on the
Of
investment
course.
as well as protection side. So same thing happens over there. The first person, when he starts earning, he's not earning that much. So he looks at a modest cover. Okay. In LIC days, before 2000, your salaries were very modest. And hence the cover used to be 1 lakh, 2 lakh. If it's a cover is there, so people used to consider whole. And if you consider those kind of salaries and now what people are drawing, it's already almost 100% jump. Okay, not 100%, 100 times jump. Okay, starting from 1 lakh to starting
Your
from
calculators will need to be recoded.
Recoded everything. So that change has taken time, and that change is basically resulting in the gap people are seeing. So if you compare a person who's getting his policy matured now, which started 25 years back, you will see, oh, it's a very modest amount.
Yeah, it's piddly amount.
Yeah, so it's a very modest amount. It's not that much. But if you had invested like what you're investing now, the amount would have been much larger. So that proportion people don't understand.
Very interesting you say this, because if you look at if you have any recent examples where consumer feedback has directly influenced you in terms of how they are seeing this change as well, because a lot of mid-career professionals must have looked at insurance in a big way. So any interesting feedback that you've received which has helped you tweak your own product offering?
Yeah. So in our protection side only, people, when they started their journey, they bought a cover of 50 lakh to start with. Okay. Now the same customers are coming back to me and telling that I want to increase this cover now. I want to take it to 2 crores.
Right.
So almost 4 times jump. How can I do it in the same policy? So those are the tweaks I have to do in the product. That okay, if a person has bought a policy, over his life journey, his income has improved, his liability is increasing, how to give him that benefit in the product. So we include a life stage benefit kind of a thing, where a person can come without any underwriting, get that increment done. So as his liability increases, his cover increases. Similarly, on the other side, people are coming back, I'm reaching 60, I want to reduce my cover now. I want to increase the health component.
Of course.
Okay, so because my liability on the life side is reduced.
Yeah.
My kids have gone solo, they are living their own life. Me and my spouse is there, and I don't want to spend that much on a risk cover. I want to increase it on the health side because my expenses are increasing there. So can in the product itself you give me that flexibility?
Understood.
So those kind of tweaking in the products are getting done because of these feedback which are coming from the customers.
But then is there any penalty or is there a premium inflation which happens because you're changing the commitment and you may want a longer tenure, but
Correct.
Again, it's a calculation that most customers are not able to easily dissect.
Yes. So that also happens. So there was a customer of mine who had taken a policy somewhere, same around 50 lakh, and now he wanted to increase the cover. And the policy had already expired 15 years. Okay. So age had increased by 15 years.
Oh yeah, so that...
Okay, so that age increasement has happened. Plus your remaining tenure is into consideration.
Right.
So basis that a new calculation came into picture. So what I found out was his new premium was almost double the initial premium. So now he's questioning why is this happening? And that is what you don't take into context, that life insurance is about probability of dying at a particular age. And hence your risk increases as your age increases. And hence your premium increases.
That mantra of starting early applies in any facet of financial planning, whether it's insurance or whether it's equity.
Fund, anything.
You got to start from day zero, basically.
Absolutely. Early you start, it's better you're going for it.
Got it. Yeah, your premiums are also much lower.
Yeah.
I'll now touch upon channel strategy and growth marketing. Clearly, digital has come a long way when it comes to interacting with audiences. E-commerce is a big play. I think, especially in BFSI, e-commerce, where people are buying policies, travel insurance, so many things directly. Even mutual funds are being bought. There are so many brokering apps. How are you dabbling with this whole hybrid model? Do you still feel there's that digital has its own strength and traditional has its own strength, or you feel that now digital has an edge over traditional?
So at the moment, we have not arrived, on the insurance side at least, we have not arrived at a digital being a sole medium to reach customers.
Got it.
Traditional mediums are going to continue. They are, that's why if you see suddenly bank assurance has become close to 60% of the total portfolio of any insurance company, and even at the national level. So that shift is happening because banks are the medium which have highest reach in country.
Of course.
Okay. And that is helping them to flourish. But what is also happening simultaneously is there is a customer segment which is more digitally savvy. And that customer segment is not going to distributor. They are going directly to the company website, or they are going directly to various other tools which are available to get information about the product and buy on their own. They don't rely on a distributor network. They are relying on their own knowledge, their own efforts to fill everything and buy. So that customer base is slowly increasing. And hence your digital mediums are suddenly becoming more viable as a distribution network, which was not there earlier. So as the number of people who are going to become more independent in terms of financial knowledge and digital experience, you will see that shift. So that transition is happening. It has happened on the mutual fund side.
But it's in insurance.
In insurance, it is still taking time. But I think in a decade, we will see that transition also happen.
More adopters through digital will
increase.
Yes.
And they are anyway increasing. And with the advent of AI and all, that is going to become speedier.
Understood.
Okay, because now people can ask any query through ChatGPT and they can curate their own portfolio and they can go ahead and buy. That's what a lot of them have started doing.
True that. In fact, a lot of broking apps are using AI and trying to do research and trying to predict how markets would perform.
Correct.
Tell us something about innovation and experiment that you tried, because clearly there's so much happening when it comes to media communication and channels. Anything that surprised you or outsized an impact, anything that you can tell our audiences?
Okay, so one thing what we did was we tried a traditional medium and merged it with the digital through a singing QR code ad kind of a thing. So what we did was we used newspaper as the traditional medium. We put a QR code over there, which had a easy process to buy insurance. Okay, and it was targeted at our self-employed customer base.
Right.
Okay, because these are the customers who cannot go through a lengthy process of buying an insurance policy. So we tried to simplify it for them. We took a huge ad, we put a QR code and asked them to just scan it, and within 15 minutes you will be able to buy a policy. Okay, and we had a huge response, almost 93 times jump in the custom queries that we got. We were able to get 2.5 times what we spent on the ad through the business that we were able to source. And this gave us a interesting understanding of the customer, that these are traditional customers who are reading newspaper, okay, but through a QR code scanning they are able to buy online, and they have that understanding that, okay, if I am going through a QR code, I am able to understand what is required, what kind of policy do I want to buy, what is the sum assured I want to buy, and within 15 minutes through a video PIVC, I'll be able to close everything and policy is getting issued.
So that clearly shows there is intent.
There is intent. People do understand.
The audience clearly has an inclination towards being financially prudent and safeguarding their interest in the long term. There's clearly intent. Can you throw some light more on an embedded insurance, because that has started to gain a lot of momentum? How are you preparing Bandhan to integrate it with your partner ecosystems?
Bandhan is basically a very tech-enabled organization. We can onboard any distributor within 24 hours. Okay, there are so many partners who are offering a lot of financial products.
Yes.
So embedded is basically coming more towards credit life kind of products, where you are taking a loan, and with that you want to have insurance covered for your liability the moment you do that. And once we are able to build our product along with the bank or any other NBFC who is giving the loans and all, we are able to get without any additional information from the customer except for a declaration of good health, that I am in a perfect health and I am taking this loan and I would like to cover that loan to ensure that this liability is covered in case of anything happens to me. The moment that happens, the policy gets issued. And there's little or no anti-selection over here, because the primary purpose for which the customer is taking the cover is to cover the loan.
Right.
Okay. Similar thing we are trying to do with other financial products, which could be an FD, which could be a saving account. Now, how to cover yourself in case anything happens, so that you don't have to break your savings. Okay. And your insurance basically covers whatever expenses are going to get incurred. And those are the embedded products that we are trying to slowly experiment with and see how customers are going to react to it. To an extent, with loan products, it has been very successful. Other products, we still have to see how it works out.
So, but this applies only to home loan products, or it covers the entire lineup?
No, not only home loan.
Okay.
So it is either home loan, gold loans, personal loans, vehicle loans, everything.
So everything is covered?
Yeah, everything is getting covered.
But I'm sure you also have consumers who already have a significant, sizable personal life insurance. Don't they question the rationale of adding this extra layer of insurance?
Some of them do, but when you make them understand that what initial cover that you had taken was to take care of your family.
Correct.
This is for your assets.
Right.
Whether you want that portion to go towards your asset and reduce your family cover, it's your call.
Understood.
So most of the people understand, and then they continue. Yeah, they are able to see that.
Many working professionals also feel that they already have a life cover, they already have a health cover. So they will always question that how many more coverage plans do I have to look at?
It's not about that. What people don't understand is a lot of assets that we are buying are not really an asset, they are liabilities. Okay, so when you are taking a home, okay, for 15-20 years it is a liability.
Yeah,
okay, anything happens to me and EMIs are not paid, that home goes.
Correct.
Okay, how to protect your family from that? Right. Okay, I have taken my first cover, or the bigger cover that what I'm talking about is more for ensuring that a regular income for my family continues. If a major chunk of that goes to service the loan, defeats the purpose. Similarly, on the vehicle loan or any other loan, it's one and the same thing. I bought a car or for a 25-30 lakh, but if I don't cover myself, and the asset which is there, effectively a liability. So we have been talking to even government about it, that as you make it mandatory to have a vehicle insurance, you should make it mandatory to have a life insurance along with, so that the liability is at least covered. So whatever asset the person is buying, whenever he is taking a loan, that loan is taken care by the insurance company and that asset remains for the family. So that is the whole purpose.
Yeah, you're mentioning that making life insurance mandatory just like car insurance. I would say that it has to also cover health insurance, because what happens is most employers are giving you health insurance, but people don't end up buying their own personal health insurance, and when they are in between jobs or when they become self-employed, they end up paying more premium to buy extra health insurance.
Yeah.
One has to be a little more aware in terms of having health insurance and make it mandatory anyway.
Government now is talking about a composite license where they are going to allow even insurance company to start selling health insurance products.
Right.
So yeah, you rightly mentioned that health is also one of the key thing. And as I gave you an example that people who are coming towards the retirement are also thinking about retirement as well as health, because health premium jumps considerably, okay, massively rather I should say. And a lot of people tend to not continue the health policies post 65 because the premiums are so high. In those times, so you have to start looking at health product differently. You have to start making a health account, health saving account for yourself. So if you start early and start saving for your health, you will have a considerable money available for you to give that kind of a cover. And slowly the products are also evolving there. So I talked about super top-up kind of policies, where you say that, okay, for 5 lakh, I will manage myself. But beyond that, if our expenses are there, which happens in the case of cancer, heart attack and all, which invariably if you go one time in the hospital, the expenses are around 15 lakh, 20 lakh plus. Okay, so those are going to get covered through super top-up policies. So it is advisable that you take products where you know that X% is being funded by you, but beyond that, if something happens, you have some insurance product which is going to cover that.
So Maneesh, I'm going to touch upon trust and transparency. BFSI industry is all about trust, whether it's a banking institution or anybody who's basically going to take my money. I want to be sure that when I need it, I should get it in wholesome returns if I can. So tell us more about what's it about building that credibility and trust through storytelling or content. How do you deal with this?
So trust in life insurance takes a long time to build, okay, because product itself is a very long-term product. And the benefit of it, you will see 15 year, 10 year or 20 year down the line. Okay, you won't see it immediately unless there is a death claim. Okay. So what we try to do is, over the years, initially it is about just talking about that we are credible, the institute that we are from has so much financial worth and hence your money is safe. Slowly using that at the initial stages of the company. Then later on moving to our own products, that these many customers we have serviced, these many claims we have addressed, and give those stories as a content on your website, testimonials, stories to the customers. So the moment you start doing that in various mediums, that credibility start building slowly. People who have first-hand experience are the best people to vouch for you. So when you have paid a death claim, when you have paid a maturity claim, when you have given some money to the customer for any benefit that is there, those are the customers who will willingly talk about your brand, willingly talk about what you have done and how the product has helped them. And that stories, once they start percolating to the your prospective customer base, that trust starts getting built. But yeah, it takes 10, 15, 20 years to build. Bandhan Life now is around 15-year-old company. And because we have serviced so many claims, that trust has already got built.
Right. But tell us something about the fraudulent transactions that take place around the fake claims that come up. How are you balancing that? Because at the end of the day, it's also investors' money and people have placed trust on you. So how are you able to detect?
So over the years, industry itself identified that this is a huge risk that is there. There were a lot of fraudulent claims happening in the initial years as well. So entire industry as well as the regulator came together and started IIB. That IIB is now storing all the data of fraudulent customers, frauds which have happened over the years, and making a repository. So whenever a claim happens, I have to pass that information to IIB to cross-check whether such claim has come only from my company or other companies also, and whether this claim is genuine or not. What are the various signs? Okay, has such a claim been put across in some other company in the past? So that gives me some kind of a benchmark or understanding whether the claim is genuine or not. Then there are claim surveyors We put those surveys to go and check and cross-check whether the claim is genuine or not. They gave us a feedback in terms of a report, and basis that report we try to address. But yeah, over the years, industry has got a lot of fraudulent claims.
So if I have to look at the future now, how are you using your expertise in product and marketing to ensure that this credibility is further dialed up, and does that give you an edge as a professional because you understand product so deeply? How do you simplify the product for your consumer?
Yeah, it definitely gives me some kind of an edge, because now as a marketer, my objective is to simplify whatever I'm making so that any customer who is reading is able to understand it. Okay, my product at the back end might be very complex, but if it is addressing the need of the customer and in a very simplified manner, it is going to be accepted by the customer. Just to give an example, anybody who is buying a bike, okay, does not want to know what the engine type is,
right,
how it functions. His objective is that whether this vehicle is going to take me from one location to other at the best value for money in terms of mileage and all. That is what a customer is looking at. He's not looking at whether the product at the back end, how it functions in terms of financial and all. His objective is, I am saving X amount. If I survive at the end of the tenure, I am getting a Y amount or not. Okay, and in case something happens to me, whether I am getting a death cover for my family to remain secure.
Right.
So that kind of a modification of a complex product into a simplified language a marketer has to do. So since I understand product from the perspective of complexity and the customer behavior and customer understanding from the simplicity perspective, that modification is done from a complex to a very simple output. And we do provide calculators in all mediums for people to play around and figure out what exactly is their need and how they are getting fulfilled, without understanding what is the complex product at the back end, which is going to help them to get that.
Understood. No, because why I brought this up is because at the end of the day, in order to enjoy leadership in building trust, your conversation with the consumer is non-stop.
Yeah.
So what are some of the attributes that you feel are pertinent in having building trust and continuous engagement with your consumer?
The main thing any customer basically needs is, if you are committing something, whether you delivering that or not. Okay, if you are promising something, deliver that. Once you are able to do it, that trust gets built up.
Right.
Okay, and that is our whole objective. When we are making a product, we are giving an entire clear picture to the customer that thanks to the regulation, that at 4% and 8% kind of return, what kind of return are you generating? Okay, in case death happens, what is going to be paid? In case any emergency happen and you have to move out of the product, what is the amount you are going to get? The moment I give that benefit illustration to the customer, that year on year, this is how your money is going to move. This is how you are going to get return in a different kind of a scenario. When things are really good, it's a 8%.
Okay.
When things are very pessimistic, on the 4% kind of a thing, you can get higher also, because if your interest rates go beyond 8%, you're getting much higher than that. But these are the benchmarks which have been set. And today India is operating somewhere around 6%, so it's somewhere in middle. If insurance company is able to manage their fund much better, then your returns are higher. So just to give an example, our equity funds are today 4+ rating in the Morningstar. Okay, that effectively means at the global stage itself, we are giving much higher return than the benchmark that we had set for ourselves. Okay, and hence on a long term, we are able to meet or exceed the commitment that we have made to the customer, and that builds trust.
You earlier talked about how digital will eventually have a much longer conversation with the audiences. That's one trend that we are seeing. But can you explain more on personalization? Because clearly there's going to be AI-driven campaigns and there's going to be voice marketing and the works. So do you believe that transformation will happen in life insurance as well when it comes to tech?
It has already started happening. As I said, certain section of the society is already utilizing those digital mediums.
Yes.
Okay, they are doing their own researches. They are doing their own utilizing calculators to arrive at what exactly they are looking at, and then going ahead and buying on their own. They are not even asking any intermediary to give that solution to them. Okay, and that is the customer base which is slowly increasing. People who are in their 15, 20 today, okay, who are more relying on AI, websites, social media to get information. These are the people who are going to buy everything going forward on a digital platform. They are not going to rely on distribution to tell them that what is good for them. They will be doing their own research, and accordingly they will be buying their own solutions. So for an insurance company or as a marketer, I have to see that what is the trend, which are this customer base who is doing this, and what additional information I can provide to them, okay, in terms of performance marketing that I do, in terms of video ads that I make, in terms of calculators that I prepare for them to play around, in terms of processes, how simplified process I can make, that if they are shown interest and they are now going to buy, the process is very simplified for the digital customer. He does not require any complexity in terms of that, okay, I have gone through the journey, but now I'm finding it is not possible for me to complete it online. I have to move to offline. I have to give this document or that document. How I can mitigate those challenges that he's facing, so that without providing those documents, I can source those documents from his digital footprints. So all those changes are happening, and now we are trying to move to a WhatsApp journey, that you do a purchase of insurance through a chat mode. You just talk to us, okay, this is my name, this is my age, this is the product I'm looking at, this is the benefit I want, suggest me a product. So AI will suggest you a right product for the fitment that you are looking at, and then complete the journey online itself through the WhatsApp.
But then at the end of the day, I think that human element still needs to come in some shape and form at some point.
It depends upon the customer profile.
Right.
So tier 2, tier 3 customers, they rely on a physical
touch point.
So there your distribution network come into picture, your Bandhan Bank employees come into picture,
Correct.
Your web aggregators, your brokers, your agents, they come into picture, okay. But people who are net savvy, they are not going to utilize these mediums.
That's a very difficult space to be in, because you're still figuring out your consumer in different ways, and ideally you would want them to use less of your bandwidth and get into automation at the end of the day.
I think this is a transition that is happening. Slowly people are moving into that direction. This is a intermediate phase kind of a thing, wherein you have people who are
being addressed,
semi comfortable from the technology perspective. There is a section which is very, very comfortable from technology perspective, and people who are 50 plus who are not savvy on the technology.
It's a wide spectrum.
It's a very wide spectrum, and you need different mediums to address them. So for a 50 plus, I'll be using traditional mediums like newspaper and all, because they rely on that. For a younger generation, I'll be using digital mediums, social media, because they rely on that. And there's an intermediate which now wants half things to be on the digital side and half on the physical side. So use those as a medium, hybrid model. So it totally depends on what customer base you are trying to address.
Since you said that, I'd like to sum up by asking you today, if a young marketer who's entering the BFSI space today, what advice would you give him or her? Because clearly you spoke about this wide spectrum, so what advice can they take from you today?
The younger generation, as a marketer, what I feel is you should basically try and capture your generation clearly, okay? So a young guy, I would rather ask him to focus on the digital side, because that is going to be the future. And how you can improve that journey for that audience is going to decide what you are going to bring as a marketer to the world, okay? So a guy who is young definitely should focus on the digital medium, should focus on how to make it more vibrant in terms of the customer need, addressing the, capturing the information, capturing his awareness of the brand, okay? How to create, because what is also happening because of social media and all, your attention span is getting very shorter, okay? And within that short span of time, how to capture his attention, making him understand that there's a need. If this need is there, how it is going to get fulfilled. And once you know that, okay, the need needs to be fulfilled, what are the possible brands? Okay, so brand comes much later in the picture. It is first the need, then how it is going to be fulfilled with what kind of a possible solution, and post-solution, what is the brand that will come into picture. Okay, so this journey, if a young marketer is able to understand and capture possible solutions to achieve that. Get that attention of the customer, get him to focus on the need, get him to move towards solution, and then focus on your brand. The moment you are able to do that journey, you will be a successful marketer.
Wonderful. That's a blueprint for most of our youngsters who are watching this. Thank you so much for being so candid and sharing such lovely insights. Thank you so much for your time, Maneesh.
Thank you. Thanks a lot.
Thank you, Maneesh, for such a rich and insightful conversation. Your integrated approach to both product and marketing, grounded in consumer insights and innovation, offers a compelling roadmap for modern insurance brands. As Bandhan Life charts its next growth story, your leadership in merging strategic product design and persuasive storytelling will undoubtedly be a key driver in reshaping the category. Stay tuned for more such inspiring conversations on HT Brand Leadership Series. See you soon.